Joined by Giles Keating. He's Global Head of Research for Credit Suisse Private Bank, and managed to hijack you before you got off to Zurich. Thanks a lot for joining us, Giles. I mean, we see what's happening. We've got comments now, positive on Monday. We had, there's going to be a deal done by the weekend. Now people are making comments such as, be prepared and expect to be underwhelmed with what comes out of the weekend's meetings. Discuss.
Well, clearly there is a roller coaster of expectations here. People got, I think, too optimistic tail end of last week. I think Chancellor Merkel was absolutely right when she said there's no single magic bullet. It's a series of measures. I think we will get quite a lot of that. We will get some new version of the Financial Stability Fund, the EFSF, some kind of insurance.
Yeah, does this represent, though, the start? Okay, we've got, of course, the monetary union, but we don't have any fiscal union. In fact, people have pointed to that. Does that represent the start of a fiscal union for the Eurozone?
Only in a very, very embryonic way. You've got to move on through that to the European Stability Mechanism. That's the next stage. And then, of course, some people, the Netherlands, are pushing very hard to go even further than that, to have binding rules on the budgets in different countries. That, though, I really think is a long, long way away, certainly not for this upcoming weekend.
Right, so what do you think the package at the weekend is going to actually reveal to us?
Well, obviously it's going to tell us something about how much is going into the banks, how that's going to be dealt with. That's been a big focus over the last 24 hours, with a bit of a sense of disappointment, numbers below 100 billion being talked about rather than the 200 plus some people were hoping for, and a lot of suggestion there won't actually be much in the way of government money coming in. So I think the more that we see being done for the banks, the better from a market point of view. Something on the Financial Stability Fund, and also perhaps some sense that the scale of the haircut on the Greek debt.
Yeah, people talking 50, saying, and others saying 50%, others saying, well, that's nowhere near enough.
I think if we got 50, to my mind, that would be a good outcome. Even, I think, 40, 45 would actually be pretty reasonable if it is combined with success in pushing through these fiscal measures that we were just hearing about in Athens.
Well, let's talk about inflation. Let's talk about the growing threat of it. Giles Keating still with us. He's Global Head of Research for Credit Suisse Private Bank. Now, it is a real problem in this part of the world, isn't it? And that is something which is the biggest threat probably to growth looking ahead.
Yeah, I mean, it's unfortunate timing in the sense that many countries in the region had felt that inflation was past the peak.
Yeah, we definitely felt that, yeah.
Exactly, and now you're suddenly giving another kick up to that. But I mean, I think the answer is it will be, as it were, an effect on the way down rather than perhaps completely pushing us back up to new highs on inflation. So it doesn't help, but I don't think it completely knocks off course that slightly low inflation trajectory.
It's about the policy response, though, and getting it right.
Very much so, and I mean, it makes it just that little bit more difficult for countries to either start or carry on easing, which obviously we've been rather hoping that they'd be able to do. And it's certainly, in China in particular, where, of course, we saw that move last week to start helping smaller businesses. Some people were hoping that might be the start of perhaps an overall easier stance. It just makes it that little bit more difficult.
Well, it's also been exacerbated to some extent in recent weeks as we've seen Asian currencies essentially, I'm not talking about the yen, of course, on the way, or indeed the RMB, but they've had a bit of a knock, haven't they? And that, of course, imports inflation as well.
Well, we've had a major decline, let's face it, although then there's been a slight stabilization more recently. So yes, that also, of course, adds a little bit to the inflation twist. Against that, of course, oil prices, some of the other commodity prices, although they've rebounded a bit just over the last couple of weeks, they also have come well down from their peaks. So it swings and roundabouts, and I think the inflation problem is a very real one, but it's not as pressing as it was 6 or 9 months ago.
I think that the Europeans and perhaps the US would probably like a slight inflation problem, wouldn't they, particularly the US?
Well, I think they'd like to have a bit more, if you like, domestic pricing power. They don't like imported inflation.
Certainly the case. As we are talking about currencies in a loose sort of sense, let's also just talk about the euro and how we've seen it just hold up incredibly well against, let's say, the dollar, indeed the RMB, and various other currencies. Now, what is that telling us? I mean, because it doesn't seem to be quite right, given all the problems that we've had in the last 18 months.
Well, I think everybody seems to think that problems in Europe are bad for the euro, and psychologically they are, and we've had a lot of shorts put on against the euro because of that. But actually, the thing that really hurts a currency is more the financial flows associated with dealing with balance sheet problems. And those, ironically, go the counterintuitive way. Think how the dollar soared when we had the subprime problem. It's because banks had to buy dollars to make good the losses they'd made. This time the losses will be in Europe. If anything, that might force people to buy euros.
Well, thank you very